Today I want to show you how to analyze the market using Fibonacci retracement. This is the Fibonacci retracement, and these are the settings starting from 100%, 79, 62, 50, 0% up to -100. The most important percentage that we are going to use is 150, between 50 and 62, and 0%. Those are the important key points, or the important levels that you are going to use. So for example, when the time to use Fibonacci retracement is, let's assume that we had this as a downtrend market. You see that this is a downtrend market, then all of a sudden we got this point. This was our previous lower high. This was our previous lower high, but the price has already done what? We have things such as this is the previous lower high, this is the low low, this is another lower high, this is the low low, and this low low, this one has broken the previous lower high. And if you don't understand exactly what is the higher high, lower high, that is under the market structure. Under the market structure, you'll need to understand that. So for the Fibonacci retracement, this is how it goes. This is our previous lower high, and this is the low low that we have. Remember that I want us to assume that we don't have this part, and this price has just went above this point. So after the price going above this point, then we don't have this. We want to trace how we can capture these trades. So we mark this point and we mark this point, so we can use as straight lines to avoid confusion. So we can use straight lines such as this one and also this one. So now I'm bringing my Fibonacci retracement. We have key points here. We have the 100% mark and 0% mark. So 100% mark is where the price was, and 0% is where the price reached before reversing. So this is where I'm talking about. Let me just mark this point. So this is the 0%. The 0% will come here, and the 100% is going to come here. We are supposed to look for our entries at 50 and 62%. So between 50 and 62%, that is where we're going to place our entries. So let us bring our Fibonacci retracement. That one. Let us now click this point where our previous point, where the price was, and where the price get into this point. Remember that it's this point before the price is just reversing back. So we anticipate this point where the price will come back to before just going up will be at 62 and 50%, between 50 and 62%. That is how it is. So let me just remove this to avoid confusion. Just remove this one. So this is how it is. 100% to where the price was, 0% to where the price get into. Remember that this is a previous low high, low low, and this is now after the market has broken this. So this is what we call the market, or the change of character, the market structure shift, the market shifting from downtrend to uptrend. So we are supposed to wait for the price to come back to between 50 and 62%. Now this is it. Between 50 and 62%, our stop loss should be at least at 79%. Our first take profit to be at 0%, and our second take profit to be at -50%. That is a good setup. You see that? I want us to see another good example of the Fibonacci retracement. We are not going far, so I want us to use this very close example, and this is where gold is right now. Check that. So this is our previous point. Remember that for us to mark the break of structure, the candlestick must be below this line. So now at this point, This is the change of character, that is the market structure shift or the change of character. Change of character meaning what? Meaning that the market started changing direction from uptrend to downtrend. What we need to do after the change of character is, this is where the price was. Now after the change of character, remember that we anticipate the price to go back to this point, to retrace back, but we don't know exactly point where the price will go. So what we need to do is to mark this point, that is where the price was, and this point, this is where the price was, these are the points we need to mark. This is where the price get into, and this is the point where the price was. So let's mark. Please don't confuse these points. In case of any question, just let me know in the comment section, and also make sure to subscribe to my YouTube channel. We are bringing more lessons like this. So when this happens, this is where the price was, and the price came up to this point, and we realized that the price has changed the character, or what we call the market structure shift, shifting from uptrend to downtrend. So at this point, this is where the price was, that is where we put our 100% mark, and this point is where we put our 0% mark. Remember that we are supposed to wait for the price to come back to at least 50% mark. Check that. The price just came back to between 50 and 62%. We just do that. Between 50 and 62%, that is where we put our entry. Our stop loss should be at least slightly above 75, and first take profit is at 0%, as we have said, and the second take profit should be at least at 50%. I believe that that is the best way on how you can understand how to use the Fibonacci retracement. Do you feel like you have more questions concerning the Fibonacci retracement? Do you feel like this content was best for you?